Hello guys, welcome to the Trading Parrot. I can see that Bitcoin is bouncing on the 4-hour support after selling from 27.5 and bouncing this morning at 26.6. We're heading towards an expectation of 78% of no change in terms of interest rates. That's going to happen in about 9 days. Overnight, the open interest has increased 400 million, and we are seeing a huge divergence between traditional markets versus what Bitcoin is doing in the past few days. USDT market cap is about to make an all-time high, and we are at levels of volatility that usually precede a massive move in the market. In today's video, we're going to look into the levels that matter the most to try to forecast where could that movement be headed next. We're going to look into the charts from the short-term perspective, the longer term, the liquidity, the most likely areas where the price could bounce. I'm going to mention a few indicators that are going to blow your mind. So stick around until the very end of the video to make sure you don't miss any of this important information. Make sure you're subscribed to the channel, hit the like, and the best thing that you can do right now for this video is to write immediately a comment. Any comment will do, and it will definitely help this channel grow much faster. So as you can see, the price has been pretty much going sideways. It seems like this movement of about 3% seems like the end of the world, but really we are not even doing a lower low relative to Friday. So this movement still constitutes a sideways movement unless we break below 26.5. We are above the 4-hour support and below the 1-hour resistance. So there is a chance that the price could head to the 1-hour, grab some liquidity before breaking the 4-hour support if we are going to go bearish. In order to fully go bullish, we need to go above 27.5 and hold it as a support. We can see that the 26.7, the price has come down and the RSI is building higher highs, which constitutes a bullish divergence, at least on the 1 hour. This doesn't necessarily help us picture what could happen in the next few weeks, but it's pointing out that this support here at the 4 hour is strong enough at least to hold us for a little bit longer if the price wanted to remain in a bearish sentiment. We can see that Bitcoin, relative to what the Nasdaq is doing and the S&P has been doing since around mid-April, is actually the opposite. The Nasdaq has been in a parabolic move. We're going to look more into that later in the video. The S&P as well has been bullish, but not parabolic. Even the DXY has been going to the upside, but Bitcoin has been going to the downside. So there can be two outcomes. It could happen that later Bitcoin needs to catch up with what the traditional markets are doing, but if the traditional markets ended up having a pullback, and this one is significant, obviously Bitcoin will continue the downtrend. Overnight, we have increased 400 millions in terms of open interest. This represents the amount of positions in the market that are using leverage. And this is nothing but risk on the market. Pretty much from November, the open interest has been building up and building up. With the exception of March 10, it's been only up. And we haven't had any reset of the open interests since then. And it's the perfect recipe for a move of over 30% of Bitcoin in any direction. Because remember, the open interest doesn't distinguish between longs and short positions. In order to know which ones are those, we're going to use a special indicator that is not just going to show us the amount of open interest, but is also going to be able to tell us what is the ratio of those longs and shorts. Stick around until the very end of the video, because the indicator is free and you can add it to your own trading view so you can do your own analysis. Here we have USDT, BUSD, and USDC market caps, and we can see that the only one that is building up is USDT, which in fact has broken the previous high and right now is located at around $83 billion. This is a lot of powder if it was deployed into the different tokens in Bitcoin. Recently, BUSD was told to not mint more BUSD, so that's why we can see that the market cap went from 23 billion and down to 5 billion. And the elephant in the room right now is the level of volatility that we are having. If you've been in the market for a while, you probably understand that levels so low of volatility, apart from being the most boring times in crypto, those are the times where you can do your best positions ever obviously as long as you are in the right side of the market. Anytime that we have very low volatility, we have an explosive move, and the tricky part is to know in which direction. So let's have a look at different indicators to try to figure out what's going to be that direction. I won't be able to advise you in any way, but I can show you all the information so you can do a much more informed decision. If you really value that, make sure that you hit the like and write a comment below telling me that this is the content that you want to watch. In terms of the CPR monthly levels, which are extremely important to understand what's coming for the next months for Bitcoin, we can see that in March, we were bouncing on top of the monthly CPR pivots, but we never managed to get to the first resistance. That was forecasting for April that we were going to break below the monthly CPR, which is precisely what we did. Right now, we are again below for a second month consecutive, and we have a clear trend line here that we need to break, which kind of coincides with the CPR new levels for June, which are located, all of them, from 27.4 to 27.8, which is more or less what everybody is expecting to break in order to flip bullish. So what we need to see for us to turn really bullish is a break above this CPR, a break above the downwards sloping trend line in yellow, and holding the level. Then, second step, we need to reach the first resistance and touch it at least once, which is what we never did when we were in April. If we manage to do that, for July, we might see the CPR levels located at a higher level, and we will expect then the price to start bouncing on those levels. This is the recipe for a bullish continuation, which is not necessarily what's gonna happen, but it's good that you know what needs to happen to confirm it. On the bearish side, we have levels of support located at 25.4, 23.6, and 21.4. All of them are on the table for the month of June, which means that it's possible, but nothing is guaranteed. And here is a structure that has me a little bit worried about the Bitcoin price right now, which is the weekly RSI. We can see that we failed twice to break above 58 level on the weekly RSI. Once we did it, we had a nice continuation up until 70. 70 rejected us, and since then we've been in this bearish structure to the downside. For the weekly momentum to come back to the upside for Bitcoin, we need to break above this trend line. If we do it very soon, it's a must that we conquer again the 58, we hold it, and then we can have a bullish continuation. It's important to notice that we have this red support band here located at around 45 level in RSI, which is totally doable for a very strong level of support that could also bounce the RSI to the upside. And for your information, that coincides with the band of price of 25.4 to 23.6. So a bounce around that band of support will coincide with this red line on the RSI, and that will make a lot of sense as well for a stronger bullish continuation. The Nasdaq currently is going in a parabolic move to the upside. You can see clearly in this chart, and it's bouncing at least 3 times on top of this RSI trend line. I wouldn't expect the Nasdaq to just continue in this way. It's a parabolic move, and it's very closely approaching this level of resistance located at 15,156. So that's going to be a very tough level to break. S&P also seems very healthy, but bear in mind we are confronting a strong level of resistance. So it's very likely that the S&P is going to bounce back down to the 4,000. That will mean that the RSI will come back down here to retest this trend line as well, and it's a must that we hold it for any continuation to the upside. DXY is doing something extremely interesting. You can see that all this move from 2020, we were always above this trend line until we broke it around November 2022. That was the beginning of all this rally that we have seen since then. We did one retest of the trend line on 20th February, which the DXY failed to conquer. And then we are currently doing another attempt to break above this trend line. And here we have two forces. We have a bullish divergence formed on the 8th of May that currently pushed the price all the way to here. And we also have a hidden bearish divergence formed by the price doing a lower low and the RSI doing a higher high. If this hidden bearish divergence on the weekly plays out, what we need to see to confirm it is obviously lower lows on the DXY. Since the previous pivot of the DXY is located at around 100, we need the DXY to go below 100 to fully confirm the hidden bearish divergence. If that happens, that will be extremely bullish. And since the Bitcoin dominance is looking so bearish right now because it's failing over and over and over to cross this level of resistance, also, we can see that it failed miserably to hold the trend line on the RSI on the weekly. So we should see a movement to the downside. Potentially will break this trend line located at 47% of dominance and heading towards the 45 more or less percent of the dominance. A movement like that of the Bitcoin dominance will definitely help sustain this bullish move on the Ethereum BTC pair. We can see that we have broken on the price and we have also broken on the RSI. So Ethereum breaking bullish so far is confirmed as long as the Bitcoin dominance continues its way from the higher 47% towards the 45%. That means some bullishness might be on the horizon for Ethereum and top market cap coins. That doesn't necessarily apply to others which are below the top 10 market cap, which haven't yet broken out from this bearish trend line. We are still against the resistance. So if you're planning to accumulate any sort of lower cap, be careful because we are still below this resistance. This can still send the lower caps to a lower low to 70 billion. So be very careful there and wait for confirmation of this breakout on others. We can see that we just lost the 100-day moving average and we're kind of still holding on the 100-day EMA. We must hold this band to maintain the narrative that in all bull markets we bounce above this level as a support, and in all bear markets we keep it as a resistance. So turning it here into a resistance could become something really bearish. We can see that the Fed are currently accumulating on their positions, so this only means that they are bullish in the market. So now let's look at the RSI on Bitcoin on the 1 hour and on the 4 hour to try to see what could be a better opportunity to start accumulating again. As we say, on the 1 hour, there's already a bullish divergence. This is the first divergence, so it's a high risk to just assume that that is the bottom. If we look at the 4 hour, we see that this support is building up and building up since the 22nd of April, and we lost the middle line here as a support, and we are heading to that yellow final support. That is located at an RSI of 33. An RSI of 33 coincides more or less with 26.6. Let's call it 26.5, and then let's make it align with this level of support on the 4 hour order block. So 26.5 will mean that the RSI since April has been bouncing here, and it will do it once again. Of course, not because it has done it 4 times, it's going to do it 5 times, but confronting this level should provide a very strong support and some potential for the upside. We will continue to monitor this, and I'll keep you informed in a time-sensitive way. Subscribe my Twitter account, which is Trading Parrot. So let's have a look at the liquidity. On the 7th day, I see something interesting. We have a level here pretty loaded at 28.1. Let's have a look at the month. We are in the middle of a band with liquidity starting from 24.5 below and above starting from 29. The most significant liquidity we can see right now is in the 3-month chart, which starts from around 25.6, which a big pocket of liquidity that ends up in 21.6. Since there's so much liquidity and it's so condensed across a big range, and since there's so much open interest in the market, a move to the downside could escalate a snowball effect that can take easily the price to these very low levels. And if I woke up one day seeing that, I wouldn't be surprised at all. But there is one point towards a movement to the upside, at least for a very short term. We are located right here. We just filled this CME gap and we are right below. And it seems like the market maker should be really happy because they managed to fill all that liquidity. But they forgot one level, which is the 27.9, that there is a CME gap that hasn't been filled right there. So yeah, there is a lot of liquidity to the downside, but we also have this level right here. On the 30th of May, we had a sell signal from breaking point. Since then, we have an opportunity to the downside of 5%. We have a very high win rate from the previous signals. And looking at the market on the daily and focusing on the open interest filter indicator that is available for free. If you search by TTP open interest, you're going to find it right here. Also, if you search by TTP breaking point, you're going to find also the indicator. Make sure you watch my previous videos explaining how to use them. The open interest filter is showing us that throughout this period, there's been a lot of shorts, and more or less from around here, there's a huge accumulation of longs. This is shown here by this band turning into green and going to the upside. So all this area here shows how many longs there are in the market. At the same time, we can see that the white band is coming down. That band represents the level of open interest in the market normalized. So this tells us that the open interest around this area was higher than in here. So yeah, the open interest has increased a lot, but this indicator probably needs to catch up tomorrow to show how much that represents when normalized. High block is confirming whenever you have too many longs or too many shorts in the past in Bitcoin, you can see that those are the extremes of the moves in the price. Alright guys, thank you so much for watching. Make sure you have liked already the video and written to help the channel. Subscribe and I'll see you in the next one. Take care. Bye bye.